the real estate crash is canceled, or is it? Or is it just delayed? What's going on with the market? All right, let's deep dive into it here. All right. So let me get to the right article here. Home prices rise in 93 of the 100 largest housing markets. Is the correction ending? Or is just a shift, a delay because of what the Federal Reserve has done? Well, let's dive in on here. So we have a lot of factors, obviously, with anything related to investing in real estate, you're going to have a lot of factors come into play. But 93 out of 100 markets, obviously hitting 93% that they're going up in value, that's telling. That is very telling. We'll see if this trend continues, but this was going into February of this year. So some markets going up obviously a bit more than others, and there are markets that are decreasing, right? But they're fewer and further between. So what's fueling this? Well, number one is mortgage rates have basically flatlined. They dipped a half point after the Fed announcement, and then they come up slightly thereafter that, but they're in the sixes range, called middle sixes, upper sixes, lower sixes. They're bouncing back and forth in the called middle 6.5%, which is a more affordable rate than 7.5% it was, or 7.25% it was last September. The other factor, and again, this is the driver, is limited inventory. This is probably just as important as the mortgage rates being stable, but they go hand in hand. So you have inventory that actually dropped week over week again, in part because there is still a lot of demand. It's telling me there is a lot of demand because this time of year, normally the inventory just increases more and more and more as it's going along. It's not happening this year. We had 2 weeks of minor increases. Now we had a decrease in inventory again this past week, which it means things are selling quickly and they're flying off the shelves. And let's get into the other article that talks about that. All right. So the housing market update, homes sell quickly as historic drop in listings fuels competitive competition among buyers. And that's really what's going on, right? When you have limited supply and you have higher demand than supply, you're going to have price increase just because it's competition. People want it. Go back to the tickle me Elmo phase that went on. Remember how retailers kept jacking up prices more and more and more because there just weren't enough of them being made, and it was intentional. And it really brought attention to that whole tickle me Elmo phase. Dumbest thing ever, but hey, there's always those fads that go on. But real estate is falling in among the same terms here. And when you have drop in interest rates, and when you have extremely limited inventory, you're going to have prices increase. Now, in looking at it, where inventory was last year and where we are now, and probably not getting any big increases going in around July, we're going to hit the same inventory amount that we had last year in July. So, and at some point, it's going to go below. It's going to go below that at some point in July. It could be very early July. And if things go the way they're going and things sell quickly, it could be even earlier than that. But let's just say call it the first or second week of July is where that line should intersect, where you have prices where actually, let me pull this up here and share this tab instead. I'm going to go back a little bit on this where we can see that. And here it is. So inventory falls to 419,725. By the way, guys, I'm watching Altos Research. Follow them. They're great. He does a fantastic, I think it's Mark Simons. He does a fantastic job with this. But this is last year's line, right? And at this point, you saw inventory increasing. And here is July. And right now, we started to go up a little bit, and now we're going back down. And if we continue on this trajectory, we're probably intersecting what could be the second, third week of June or into the first or second week of July. Should intersect somewhere around that point. And then you have, we just have an intersecting line. It's really all we have. If rates are still flat, still where they are, things should be pretty solid. And again, real estate should have a modest increase. When CoreLogic put that 3.7 to 4.6% increase in real estate values this year, that caught my attention. And they don't put that out there lightly. And I took it as very serious. And I believe we're hitting and going in that direction. We could definitely get in that 3.7 to 4.6, slightly less if rates increase, take that uptick, slightly more if rates drop down a little bit. I don't know if we'll get into the fives. Would love to get into fives at some point here. They are talking about them potentially by Q3, 4 that could happen. Would be great. Then you'll see the 5+ potential increase in prices year over year. We'll see, because last year when we had this high inventory in July, August, September, and even going to November, and really started to dip down at the end of November before we got to December. When this happened, we had higher interest rates in the second quarter, and interest dwindled. But interest normally dwindles in the fall anyway. Pretty much after July and August, this is time where prices dip down, things go down, and inventory starts to increase. And then it takes its dive towards the end of the year, and then we go through the same cycle every year in real estate. So you're going to get less for your property if it goes out in the market in September than you would if it went out in March or April or May. That's just the way it goes. So what we have is an interesting market, nonetheless, a very, very interesting market. We'll see how much things do end up going up. And now, secondarily, let's get into, are we postponing or delaying in the decrease in real estate? And my guess is still delaying. That we're still going to have not a real estate crash, but we're going to have a correction. Some would say we had a modest correction last year, and you could say that, but we really didn't have too much of a dip. I think we could have more likely to have the 5 to 10% decrease, but it's going to be over a couple of years. Let's call 2024 when I'm a little less bullish on the market, 2025. But as I'm seeing unemployment data, the bogus unemployment data you saw out where these jobs, 250 plus thousand when they were expecting 253, I think, when they were expecting 180,000 jobs. That's kind of mirage, and that's something that we're going to start to see over the next 3 to 6 months, because it's companies that are hiring. The hiring is decreasing. When the hiring is decreasing and you have a population that's increasing, you got a problem right there. And jobs are decreasing at a more rapid rate in certain sectors than others. Obviously, in the tech sector, they got hammered last year, right? Hemorrhaged. Now the banking sector is going to get hemorrhaged. What's the next sector to get hemorrhaged? Well, commercial real estate's one of them. Already getting hemorrhaged, partly because of the rates from the Federal Reserve. So we're going to see some bad data come out, probably hitting in the fall of this year. Bad economic data, bad unemployment data, which will bleed into real estate for 2024, where I'm much less bullish, but it should still be solid if you're looking to buy and hold. We might get much better rates in 2024. We'll see. When I say much better, maybe into the fives. I don't know if we'll ever dip down below the fives again, but one could be hopeful. So that's kind of what we're seeing here. I'm going to stop sharing, guys. The market is what the market is. It's definitely still in a positive mode right here. We still have solid unemployment numbers, even though longer term, I am less bullish on what's going on here with the economy and the cost of things. Inflation is still a problem. And you couple inflation with wages that aren't rising, because the Federal Reserve has the policies that it has, where it's killing wage increases and it's creating demand destruction. We're going to have things that follow suit in a very negative way over the next couple of years. So just be ready for that. But real estate seems solid for now. And remember this, if you're new to investing or looking to get investing or ramp up your investing, now is a great time to get in, because when the market crashes, you make way more money than when the market is going up. And that's just because you have way less competition. All right, guys, we'll catch you in the next one.